Are stocks headed higher from here, or is it time to cash in some profits? In today's video, we're going to talk about the bigger picture. We'll also take a look at the macro outlook and what might be coming next from the Federal Reserve. Stay tuned. A big part of it comes from the jobs data this week. And of course, we will be asking the question, as we do frequently on this channel, is the AI trade breaking down, or is there more room for these companies to expand their profits? That's, of course, the big question when it comes to stocks, is whether or not their earnings can sustain the high expectations the market currently has. And we'll also be taking a look at some of the stronger and weaker sectors in this market underneath the hood. All I ask as we get started is if you could help me out on this YouTube channel. It's still a new channel. If you could subscribe if you're new and hit the thumbs up button, I'd greatly appreciate it. So let's start out by taking a look at the S&P 500. We just take a quick look at the monthly chart. This thing is still on a roll to the upside. Very strong overall price momentum. We've broken out of that consolidation from the start of the year highs. We had the big April sell-off, and then price completely rebounded. And if we just take a quick look at a technical perspective of the SPY ETF, which is a large reflection of course, the overall market, we do have a nice series of higher lows and higher highs. Technical price action remains to the upside. And so the path of least resistance, just based on a price momentum perspective, would tell you that the easiest direction for stocks to go is higher. But which stocks? That's the question we talk about in this video, and that is why you are here, is not just to talk about, okay, the overall market looks okay, but which areas are poised to do better than others. Anyone could just sit back and buy the SPY. The purpose of this channel is to look for ideas to build some alpha. Of course, we can also take a look at the weekly time frame. Little bit of consolidation this past week. Nothing too big to take away from this, in my opinion. No lower lows, just a consolidation doji, which you can take that as a bearish signal, but take a look right here. You had one over here. Let's see if we can find any other ones. You had one right here. You had one right here. A couple doji / hammer looking candles, and a lot of them actually ended up resolving to the upside. So I wouldn't take too much of a read on this past weekly candle. However, things start to get interesting when we take a look at the daily chart. The daily chart is, yes, in an uptrend, but we had a nice little correction this past week. I mean, this is really, truly emphasis on the word little, right? Very, very small pullback here from the high. You're talking about just like under a 2% pullback. And then buyers seem to have stepped up on Friday. Going into this week, I would not be surprised if bulls remain strong as long as you remain above this 656 level. I think the path of least resistance is to head back to test those all-time highs. Now, if you do start to see constructive selling coming into this chart, what it will likely look like is a break through those lows and then some sort of response from the bears from the other side of this. This same price level looks very differently when you approach it from the top than if you were to have approached it from the bottom, right? What I mean by that is if you break through that level and come back to it, it's a good chance, in my opinion, you could see some more profit taking going into that. But that's not the environment that we're in. We saw sharp buying take place on Thursday as this price gapped down, buyers stepped in. But I want to talk a little bit about this week before we get into a bunch of individual stocks and sectors, the big picture, which is all about the non-farm payroll event that we get this upcoming Friday. Now, if we just take a quick look at the macro screener within the stock box, which is a tool that we build and showcase on this channel frequently, we've had some interesting data. And if we take a look at the overall impact on the stock market here from the macro stuff that we study, now again, don't let this scare you. We're going to break it down really simply here. You have some jobs data down here, you have some inflation reads, and you have some growth metrics. This gives us an idea of how the US economy is performing relative to expectations. And the answer is it's a little bit mixed. You have some jobs data, which has been really poor for the month of August, reported in September. And you've also had some good growth metrics like GDP statistics and PMIs, retail sales. You've had some good numbers there. So a mixed bag to say the least. The reason this week is so pivotal is because we're coming into the non-farm payroll. We'll also be getting the ADP and the JOLTS job openings and jobless claims and unemployment rates. So this is a huge week all about the very thing that has been spooking the markets a little bit recently, which is jobs data. So stay tuned on this. Currently, if we just scroll down, I added this new feature to the tool. which is sectors with stronger macro scores and sectors with weaker macro scores. Now, not to get too granular with this, but it basically looks at this set of data and says which industries or sectors would likely do better in the given environment. Now, again, there's an internal algorithm that goes through all this data point and kind of gets a output. And what we can see here is the consumer discretionary, the Russell, XLRE, that is real estate, and technology stocks are getting some of our stronger readings. So going back to the chart for a moment, and by the way, if you would like to get access to the tool that I'm showcasing here, you can do so down below in the description below this video. You can check out our website, a1trading.com/stockbox. That's a1trading.com/stockbox, or check out the link in the description down below. Also, just as a quick plug, if you use the promo code YTVIP at checkout, you get a discount on the tool for being a subscriber of my YouTube channel here. I appreciate it. Okay, so back to the SPY. Again, price looks constructive to the upside. Macro looks mixed. Watch those jobs data. Let's just do a quick overview of the Qs. Very similar story, though we did not quite retest those FOMC lows. Very well could see that. If you get any volatility around the jobs number, perhaps we make a move lower. But in my opinion, certain sectors and certain stocks start to become a buy the dip opportunity if we do get a further pullback. Take a look at the QQQ ETF. I've got a Fibonacci retracement, which lines up very nicely with this 38.2% retracement. This would be the first area where I start looking at buying the dip on either the Qs themselves or specifically some individual stocks, which we'll get into in this video. So again, I do like the Qs. If you do get a further pullback in this market, I do quite like the opportunity there. RSP, this is the Equal ETF for the S&P 500. Still kind of consolidating here, but no significant damage to the downside. We actually saw a nice constructive bounce from these lows. So bulls still in control here. Let's take a look at the Russell 2000 index, which I again mentioned was one of the more popular or more strong suited indices here on this list. So if we do get IWM pulling back here, I'm watching for possible support areas. In fact, I can draw them in here since we've got this ability right there. So I'm looking for some possible pullback plays on the Russell, as well as I do think Russell small cap companies could outperform in the coming months to years. So we'll see what plays out there. Volatility got crushed on Friday, big slide lower after the PCE numbers came in, not too threatening to the markets. So let's talk a little bit about some sectors, because I mentioned some of the stronger sectors. Let's take a look at XLY. Now, XLY, if we can pull this up, XLY is the consumer discretionary stocks. These are, I like to think of these as wants for the consumer. These are things that people don't necessarily need, but can spend, discretionary spending, right? So I actually think that these potentially have some more upside if the economy holds up. And again, it depends with what's coming down the pipeline, but if the Fed cuts rates, if things hold out okay overall in the economy, consumer discretionary stocks, which were sort of a mixed bag to start the year, huge sell-off, have recently come back towards those highs. If you were to get a pullback in this area of the market, I actually quite like the idea of potentially stepping in and buying some individual companies or the consumer discretionary ETF itself. You've got some constructive support looking left around the 10th of September. We also mentioned a couple other ETFs. Let's see what else we had there. We had IWM. We already looked at XOY. Let's look at real estate. I don't like the chart for real estate, but I will watch for a breakout. Here's XLRE, very choppy chart, right? You have just some clear areas of support looking south. And if we look north, you also have some resistance. So I would say for me personally on this one, I'm going to pass unless you were to get a substantial breakout, in which case, if you were to get rate cuts and the growth metrics holding up okay in the stock box, we start to look for longs on real estate stocks. But we'll see. That's something I'm looking at. Let's take a look at technology, XLK. Of course, take a look at the tech sector, which is probably the most, it is the most important sector to the S&P 500, as many of the big guys and girls in the S&P 500, of course, are tech companies. So this one still looks really strong. If you were to get a pullback to the 270 area or so, again, you've got clear support. I would personally view that as more so of a bounce opportunity, looking for long side continuation there. So let's also just take a look at some of the weaker sectors. If we take a look at XLV, healthcare sort of had this constructive push going on, and then buyers just could not hold it. Just take a look here at this area of support, trying to make a breakthrough, right? Push to the upside and then failed here. Doesn't mean all healthcare stocks don't look good, but the sector itself is getting a pretty low score. Energy, XLE, energy actually, I kind of don't hate right now. I think that there may be some upside in crude oil prices, which I talk about mostly on my other channel, where I talk a little bit about more about commodities, but and indices, et cetera. But still watching energy stocks. I don't love the idea of getting overwhelmingly long energy, but I would like the idea of kind of staying long oil prices. Anyways, consumer staples, XLP. This stock looks, or this area of the market looks rough and has looked rough for a little while. You're not too far off, guys, from April lows here when it comes to the consumer staples area of the market. Is this a warning about the consumer? Possibly. I think that you may have some challenges ahead for the consumer, but then again, you do still have consumer discretionary holding up okay. So I just don't love the area. The momentum is just not there. We've got choppy consolidation. If you're a longer term buyer, there may be some opportunity to pick up some consumer staple stocks. Let's take a look, by the way. Here's a breakdown. If you want to, feel free to pause the video. You're looking at the top sectors page within the stock box, which looks at all the stats that we've been talking about: GDP numbers, retail sales, employment data, inflation data, etc. And this is, you can see how it's sort of the matrix of its scoring on each particular sector, how each thing is getting a stronger or weaker score overall. So feel free to pause if you want to. If we take a look at the top stocks page, now we can get into some individual companies that look better than others. Specifically, I want to talk about UNH. I've talked about it a lot on the channel. I mentioned not all healthcare stocks look horrible. I actually like the momentum that seems to be forming. Looks like we bottomed out, at least for now, around the 240 level. We've shot up, consolidated, and have pushed a second time. If we can get a pullback into the 38.2% retracement, I like the idea of a possible long trade on UNH. I'm going to be watching that out the gates this week. Take a look at Amazon, another company I really like. Looking for pullbacks in this one, which we've already started to see. If we do get a little bit more of a push to the downside, I see a really clear area of support around this 211 area on the stock price. So looking for that pullback here this week. We do have some minor support also being tested as we speak. ServiceNow, if we take a look at NOW, just take a quick look at this. Don't love the chart. Momentum is not really, there's not very much clear momentum on this chart. I do like to see that momentum scoring from the stock box getting a +2. It's not a must, but it's definitely a plus, right? So that UNH getting that momentum score on the technical front looks good. Let's see, what else do we have? A lot of stocks not getting a ton of momentum. We do have like Medtronic, for example. I do like MDT. Take a look at MDT. Medtronic has got some nice momentum testing these highs. There could be a bit of a breakout trade coming for Medtronic that could be interesting. So maybe a possible, you've got resistance overhead. If you were to see this stock start to break out, I would like the idea of a possible break and retest continuation on Medtronic. I do like the company. I think the area of the market is cool. They make medical devices, and I think that area has a lot of potential to continue to grow in coming years. In a world of more AI and surgeries and procedures and all sorts of things, I think Medtronic could be a winner there. So I do like that one. Taiwan Semi is another, of course, very popular semiconductor company. If we take a look at Taiwan Semi, just massive momentum on this stock. If we were to draw some fibs here from this swing low to swing high, I think you start getting more interesting if you were to get a pullback into this area, the 61.8. I know that's a far distance away, but if you were to see a bit of a stock market pullback, 61.8 starts to look attractive for Taiwan Semi. If we take a look at SMH, here's the ETF for semiconductors. I feel the same way here. So love the area, would prefer to wait for a discount or a pullback to the 61.8% retracement to 50% retracement zone. So looking for this kind of move. And by the way, as I mentioned earlier, the top stocks algorithm, similar to the top sectors algorithm, it's looking at a collection of technical, sentiment, and financial readings, and then automatically generating a list of stocks that look potentially like poised for potential upside. So I like the the simplicity here of essentially having a watch list generated for me. Google's getting a +4 score. Stock has kind of run away a little bit in valuation. So, I mean, really still not that bad. If we take a look at Google in isolation, you can see like an Apple, what we really look at here is we look at the value or some of the financials to determine if the value of the stock is cheap or expensive relative to its own 3-year average history. So if we take a look, for example, at a Google, if we pull up Google, take a look here, what you can see is that the PE ratio has sort of risen in the last few months. I mean, the stock has been on an absolute run to the upside. Let's pull up GOOGL. And you guys know, if you've been watching, you know I love this stock. I actually got called away at 215. So I had positions long Google around 160 or so. I want to say 165. Ended up getting called away. Took a really nice profit. Obviously missed out on this last leg higher, but would be interested in getting in on a dip. But where is a dip, you say? Well, the most recent obvious example, I would say, is actually drawing from this fib low to here. You start getting this 50% retracement, which is the gap open area. But really, I mean, the stock to me doesn't trade extremely expensive. What I mean by that is if we go back to our chart here, yes, sure, the technical chart looks really great for Google, like really, really strong and maybe a little expensive. But the stock itself doesn't trade ridiculously expensive. I mean, a 23 forward PE, 26, this is definitely up, but it's still not miles away from its 3-year average. So I wouldn't mind a pullback in Google stock. And if it does pull back, I may get a chance to get back into the stock, then get back into the name for another trade. But overall, again, I think it has way more potential to continue to be an AI leader. A lot of people gave up on Google. I bought the shares, did really well with them, but would love to get back in. If we draw fibs from the swing low all the way back here, what I find really interesting about this one is check this out. You have a pullback to the 38.2%, right near the prior all-time high. That is also an area of support with the 38.2% retracement. And that's from the April lows to the previous highs. I mean, I wouldn't be surprised for that to happen. If the stock market does have a little bit of a pullback this week on jobs numbers, Google would be on my watch list, though I don't think you're going to get a 14% drop in Google in a quick succession. It could happen in the next 2 to 3 months. I mean, these things happen even in bull markets. You get corrective periods for great names too. So if it happens, I might get a chance to get back into Google. If it doesn't, then I will continue to look for other names to watch in the portfolio for possible trades and or investments. Let's see what else we have in phase. Some of these names, again, are going to be higher risk than others. And I like to see ones that have good momentum. So if we were to scan for momentum, we could actually make this, perhaps I'll do this in the future. We want stocks in this list that are essentially, they have a lot of momentum and they also have good scores. So things like Medtronic, a 5 score with momentum to the upside. UNH is going to be top of list for me. Uber is another one. Let's take a look at Uber because, again, we have Uber getting a pretty good score. Where did Uber go? Yeah, getting a +6 score. Financials still look okay. I mean, let's just, before we look at the stock, we'll pull up UBER. And what you can see here is financials look healthy, right? Like you still have a forward PE and PE ratio that look modest compared to their historical averages. Companies growing. I mean, earnings look like they continue to grow overall pretty strong. Revenues growing as well. So I take a look at a stock like Uber. And again, this is another one that for me is a buy on dips. I already own shares of Uber, but would love to add some more for a longer term hold. So if we get a pullback in Uber, I will probably be looking for that around the $90 per share mark. Kind of crazy. I own the shares from much lower, but the stock has been a monster this year. It's done really, really well and bouncing back dramatically from those April lows. I mean, from the lows, you're up 60%, 62% or so. So that's a huge move higher. Really, really strong. Real quick, looking at GDX, this is gold miners. I talked about it last week. The thing has just been in a monster uptrend. Would be interested in buying some of these if they were to pull back, but not really anywhere near where I can touch them. I mean, they're not expensive per se, and a lot of people would argue that they still have plenty of room to run considering gold prices are so, astronomical this year or just running to the upside. Take a look at gold prices just skyrocketing. But, for me, it would probably be a wait for a dip kind of situation. Just taking a look, another thing I actually did is I added, or I am still long ExxonMobil. Here, let me show you the position. Okay, so I've logged into my brokerage that I use, which is Webull, which is linked, by the way, in the description down below if you want to check them out. So I'm long ExxonMobil, and I like this company for a number of reasons. I mean, it's a steady Eddie kind of company. It's been around forever, and at one point it was a giant part of the S&P 500. But anyways, I like ExxonMobil for the upside potential that I think that there is in a number of facets. I think inflation still remains relatively high. So commodity prices like oil, I think, have potential upside. There's also geopolitical uncertainties and risk, but you're also seeing some bounce back in growth metrics in the economy. We've talked about this here earlier in the video. You had a really good GDP number, so I decided to continue to stay long a lot of energy. Well, not a lot of energy, but some energy stocks, some power companies. So I'll go into that now. So ExxonMobil, I still have a stop loss here trailed. I actually think I'm going to trail this, or I will trail this. We had a nice close on Friday above this prior high. I'll probably trail my stop here around this 114 area or so, just to lock in a little bit more on the trade. I'm looking for a breakout. ExxonMobil's been in consolidation for quite some time, and we just broke out of a really big area. So I'm watching for, if you do get a pullback, buyers to step in pretty quick. Otherwise, I'm just going to take profits on this move. Up about $2,000 on this trade so far. Let's take a look also at NEE. This is another stock that I own. It's a power company, and I don't think it has a very high score in the stock box anymore. But when it was lower, it was getting some decent valuation, and we're up nice on this stock so far. Up about $1,130 or so. And another one in the same area, power companies, again, area that I like right now. XL Energy, doing really well here. So I took a long position around this area with a stop below, and we have just rocketed to the upside. So I'm looking for an opportunity, if you do get some sort of higher low, to trail a stop, lock something in here on this trade. But I do think power companies have a couple of possibilities in terms of why they could continue to go up. One of the big ones is, all the AI stuff requires a ton of power, a ton of data centers, a ton of just grid build out. And I do like the prospect of owning power companies and energy companies and utilities companies to sort of facilitate all of the spending that is going in on that side of things. I think, AI, is it a bubble? Is it not a bubble? We talked about that at the start of this video, but I think that it probably is a bubble, but trying to time when that bubble is going to pop, to me, is kind of silly. I think that there is, still plenty of potential for some of these companies to continue to grow and scale. And there's, the economy itself seems to be holding up. So I think that supports a continued, at least for now, the bubble continues kind of thing. Again, it's weird because, you can think you are in a bubble and you could be correct about that. And 3 years could go by. You could watch the stock market double, and then it could crash and lose 30%. But you would have been better off buying it at that time. Now, I'm not advocating for going out and just buying aggressively at these levels, but I do think that there are certain names that look better than others. Here's a stock I'm not doing very well on. This is Chipotle, CMG. I bought this name, and if I just take a look, let's do some homework on CMG. So if I go to my stock analyzer and I pull up CMG, the question really comes down, do you believe in the company's ability to turn things around? Because the big thing that they're struggling with is revenue growth and earnings growth. It's just not hitting like it used to. What do you guys think? If you made it this far in this video, do you guys like Chipotle? If you're 24 minutes into the video, let me know. What are your thoughts on, like, just anecdotally, like personally going to Chipotle? I still really like it. However, I totally understand the frustration that has gone into, their portion sizes have significantly decreased. The prices have gone up. I get it. I mean, the stock is really hated for a good reason, but I do think that they have the potential to turn things around, to improve things, and to kind of get back on a growth train. If I'm wrong, I mean, I'm just wrong. But the PE ratio, let's hope that the management can turn something around. Because when you're talking about, a trailing 12-month PE ratio of 35, it's not cheap, right? It's still not a cheap stock. but it's still significantly lower than its 3-year average. And sometimes you do get turnaround companies. Like if we take a look at, Starbucks is not the greatest example, but it's kind of a comparable world. If we take a look at monthly chart of Starbucks, like this thing has had some really poor periods. Obviously, the 2008 financial crisis, everything dropped, but you've had some periods where the stock has gotten cratered and people, no longer like it. And then all of a sudden, boom, it goes up. And Chipotle is not unlike that in some ways, where you've had these periods where people really doubted the stock, but we've recently gone into a period. I mean, this is, by the way, that's a 38% drawdown. Let's see where we're at right now in terms of, you're even worse, right? 42% drawdown. So to me, it's now or never for Chipotle. If we start to continue to fail at these levels, if we start to see, earnings and revenue growth continue to fail out, I mean, your line of the sand for me is probably below 36. In fact, that's probably where I'll put a stop on the trade. If this thing does not go, start to find some support and turn things around, put out some good earnings numbers, I mean, I'm not going to go down with the ship on this stock. But I do think that from a longer term basis, the risk to reward here on Chipotle is not terrible. So I own the stock. I think that there is upside, but I'm not willing to die with this one. So if I'm wrong, I'm wrong. I own 500 shares, and we'll see how it goes. But again, not getting a great score either. Would love to see from a momentum perspective. I'd love to see this thing start to break out, get a constructive bottom on the stock price, specifically, base out, start to consolidate, push higher, drive higher. Like we need to see this kind of price action. And if we continue to sink lower, I will probably just cut the stock out of my portfolio and put the capital somewhere I like more. So, that's the point of the top stocks page, is to keep me, ready and looking for better opportunities. Abbott Laboratories, another one, ABT. This is a stock that I'm watching here. I think this one's consolidated for quite some time. You're talking about most of this year has been in consolidation. You did get a breakaway in the January month. Consolidation, I like the stock. I think you have some nice constructive momentum. I like the stock at a pullback of 129. I do want to pull this one up on the stock analyzer tool just to see what this is looking like. ABT, Abbott Laboratories, is a competitor to Medtronic, so medical device type of company. And the forward PE ratio, 23.56, trailing 12-month PE ratio, 16.76. I mean, these are below averages. You still have growth and earnings and revenue. I think this is a solid potential pickup. So I like Abbott Laboratories. If you were to get a little bit of a sell-off here in the stock, I'll keep that on the watch list, and likely would take a position if we were to get a pullback into that area. I put a stop below that structure point just to see if we can get a bounce there and maybe trade it to the long side. Hope this was helpful. If you want to check out the stock box, like I mentioned, there's a link in the description down below, or head over on your mobile device, whatever's easiest for you. Head over to a1trading.com/stockbox to explore the full list of tools that we offer. Thanks so much for watching, guys. We'll see you next time.